Folks, this is quickly becoming a very popular video series where Mr. Millennial Mike goes deep into the comments. Now he's getting stuff on Instagram where we get spicy comments, we get thoughtful comments, and yes, we even occasionally show me some love. But Mike really likes to push my buttons. So we're going to find out what hot topics, juicy topics Mr. Millennial Mike has for me this week, and see if he can make me swear. Let's see what we do.
I've actually accomplished that a few times in recent
Yes, you
weeks.
have.
Okay, yeah. So, folks, this is a part of Zuber's show where we do bring in questions from the comment section. We try to get great questions, like sincere, honest questions that people have. We try to throw in a curveball here or there, and of course, we do love to give the haters their day in the light to shine. So, we're going to start today talking about asset crash in multifamily. So, this one came from Instagram. David Romo sends me a message. He says, "Do you think there will be a crash in multifamily housing, and what kind of timeline can we expect?"
So the good news is, if you're watching my channel, you know I've talked to several large syndicators, people who play in this space, tens of millions, if not hundreds of millions of dollars, and the short answer is yes. And I've been waving the white flag for about a year now. As usual, I'm early on purpose because I do it because I can see them coming after 20 some odd years. And if you listen, you can hopefully prepare. You could get out, and maybe, hopefully, you're not one of the LPs who got in late, right? If you are a limited partner who got into Oklahoma City in the last 12 months with short-term bridge debt, interest only, you've lost your money. You've just lost it. It's gone. Your GP is not going to tell you that. But Oklahoma City has seen a 14% drop in rent. Occupancy is falling, and those deals no longer make sense. So yeah, there will be pain in the multifamily space. I peg a crash at 20%. I don't know that there's any markets outside of maybe San Francisco that will show an overall drop of 20%. But there is no question that there will be plenty of assets sold at rock bottom prices. In fact, one of my personal favorite videos over the last month or so is how Jonathan Twomley and I took a $25 million building, made very small adjustments to occupancy, rent, interest rate, and cap rate, and we turned that $25 million deal into 8. So yeah, there will be assets that crash. There will be people that lose lots of money. There will be billionaires who aren't billionaires anymore. But yeah, there's a lot of pain coming to multifamily.
So when you say multifamily, for the people out there watching, are you talking about duplexes and up, or are you talking about commercial 5 units and up?
It is always the financing. I hope something that people pick up from me. And if you see me interact with the Twitter idiots out there, it's on my Twitter account, which I'm getting more active in. It's always the financing. Why is this UK housing crashing? Financing. Why is Canada crashing? Financing. Why is Australia crashing? Financing.
Right.
Why is multifamily going to crash? Financing. Short-term, interest rate only, bridge debt, must be refied, call the loans. In fact, I've told you repeatedly that my call on the commercial market was because of the financing, because they're repeating the mistakes. Why did 06 happen? Let's just play 2006, that last stupid year. Short-term debt, 2 and 28ths, liar loans. There was a general feeling that real estate only went up. Refi till you die, all these things. And the gamblers came in and ran it up. And then the 50% of loans were ARM. Those reset in 08. The best time to buy was 10. So back to the timing, it always takes longer than what you want. 06 was the worst lending year. The pain wasn't, you weren't able to find deals till 2010. Right. So we're in it now, but banks will extend and pretend, and you'll do some equity raises. So people are asking me when to go shopping. Today's the time to get prepared. Best case, I'll find a deal late Q4, but probably in 2024. But again, a lot of people they just want it today. That's just not how real estate works. It is always more slower than most people want. That is my biggest issue with the Crash Bros, is they were calling things that were just technically not possible given timelines.
Mhm.
They're calling for this epic crash because of foreclosures in 90 days. Remember that one?
Oh yeah.
It takes a year to foreclose on somebody. How is that possible? So again, it is always slower than what you want, but that's good news. You can get prepared. You can
Right.
get ready. You can network. You can get your capital together. You get your partners together. That's why Olivia and I are spending thousands of dollars to go to a multifamily event in Vegas at the end of the year or the end of April. Or oh shoot, that's this month. Because I want to be better prepared. I've done it, but I could be better. So that's where I'm going.
What event are you going to?
Oh, Jonathan Twombly's
Oh, nice.
event that he's putting on. I would say the name, but I forgot. But yeah, he's putting on an event. And again, I want everybody to realize I paid for the event. He offered me free tickets. I said no. He had initially put out a 50% discount to ORAT, which is the same discount I got. So I paid up just like everybody else. I don't do things that the audience doesn't get. So we're going to be there on our dime, sitting in the audience.
Well, I think it'll be exciting for people to hear your takeaways at the end of that event.
And you will.
All right. So this is a question that's been kind of rolling up in various different forms throughout your comment section over the last few weeks, and that's the FTX lawsuits against Meet Kevin, Graham Stephan, some of the other big creators. So Maxter86 says, I would love your thoughts on Meet Kevin, Graham Stephan, etc. being sued. What do you think about that, Mike?
First off, we live in a world where litigation is a very common. Gosh, I kind of have mixed feelings, right? First and foremost, I don't like what they did, obviously. I think anytime you do kind of sponsorships and you're not clear with the audience, that's kind of hidden. Let's be clear, these weren't the only ones.
They got Tom Brady.
Yeah, exactly. Tom Brady, Shaquille O'Neal. I mean,
Mr. Wonderful.
Mr. Wonderful. So again, I think there's a lot of that out there. Yeah, if you're gonna play, there's a downside. So I think it's in reputational risk for sure. I think there's a lot of angry people. And we'll see where it goes. I assume there'll be some kind of slap on the wrist. All of them will cut some check. It won't be anywhere close to what they made or how much pain they caused.
Right.
I do think it's a reminder that everybody should be an adult, do your own research. But I got to tell you, when I look at that, you know what I think? I think about, when do the Crash Bros get sued? How many times have the Crash Bros, they just delete their videos? I've saved some because I know they're going to delete them.
Yep.
When do the Crash Bros get sued for, because again, many of them were calling dates. Like, it's crashing October 2021. Really? That didn't happen. I mean, how many people missed out on lifetime low rates because of these idiots? When do they get sued? Yeah. That was my thinking.
I think there's one key difference, and it would be probably with their argument, technically their legal argument, is there's a difference between somebody telling you to take action, like participate in FTX, and someone telling you to not take action in terms of don't participate in the real estate market because it's a danger. So that will be the shield that they hide behind. Hey, we just told people they can do whatever they want. We were just encouraging them not to participate in a dangerous environment. So
and to that point, I don't expect them to lose, but that doesn't mean a suit can't be filed.
It's true.
Very clear.
That's true. That's true. Yeah. And I agree with you, because in reality, they have probably caused more pain to more people, and it will be an ongoing pain. Yes. Yes.
There are people that will be lifetime renters because of them.
Right. Right. Okay, so let's talk about another crisis. Silicon Valley Bank, the banking crisis. We've talked about that in recent weeks. So Nadine Ostrowski, 9574 says, I don't understand, if the CFO and CEO were selling off shares because they saw it coming, why did they not try to prevent it? Or was there no way for them to prevent it once they noticed it? And then the follow-up question is, why is it legal for them to abandon ship on insider information? Isn't that insider trading?
So I'll answer the second question first. It's absolutely insider trading, and I expect there to be legal clawbacks, and that money will be gone. And it would not shock me if one of them ends up in jail.
Interesting. Wow.
Yeah, no, they won't. They'll be in, country club jail, but jail nonetheless.
Okay.
Probably a place they never thought they would be.
Right.
Yeah, somebody's going to jail. They'll make it. I think somebody will be made. They're not going to, like, one of the biggest complaints of the '08 crash is nobody went to jail. There were a couple of stock traders or whatnot, but no big name.
Right.
I don't expect that to be the case here.
Interesting.
So
Now,
we'll
quick
see.
question, Brett. I don't know if you can answer it. Follow up on that. So the FDIC is who comes in, insures, and takes over the bank. Are they the ones who prosecute, or is that the SEC?
That'll be the SEC, I'm sure.
Yeah.
Yeah,
Okay.
I don't know that FDIC. I'm sure they have, but no, it'll be the SEC. Yeah,
Okay.
for sure.
Cool.
Um,
Okay. And so
but
then
let's go back. Let's to the
go
first
ahead.
question.
Sure.
So the first question is, I think what they saw was the Titanic after hitting the iceberg. It was unsavable. That's what I think they saw. So they should have, but I think they hit the iceberg. I think they saw, 30% of the ship already flooded, and they're like, "Whoop, we just passed this certain line of no return. Let's see what we can get out of this." I think it's all bad. It's just all bad.
Yeah, I think it's honestly, it's one of the most shameless things because there's a reason why the commenter used the phrase, why are they allowed to abandon ship? The captain goes down to the ship. If he's the one who's at the helm, making the decisions, telling people what to do and where to be and how to navigate that ship, and then it fails and it sinks, he is held responsible for his decisions, and he goes down with the ship, and they cowardly abandon ship trying to save themselves. It's embarrassing.
Well said.
Okay, so and with the crash of Silicon Valley Bank and other banks like Signature Bank, people are asking about lending standards tightening. So I've heard you say that lending standards could tighten, and if the prices and assets started crashing, people wouldn't be able to easily take advantage of that because there's a change in lending. So this kind of goes back to the crash bro argument of, okay, let's say that prices start to come down, assets start to crash, but if lending standards are tightening, most people, your average people, aren't even going to be able to take advantage of falling asset prices.
Yeah. So let me kind of tweak on this. Asset prices aren't coming down. Okay. So, but what you should say, or you should think, is interest rates. What have I told people that I expect to happen over the next 6 months? Is I expect rates to come down. I think rates closed the week at 6.4, something like that. I'm on record saying they're going sub 6. So the question should be, oh my God, we're sub 6% now. I finally qualify. I can get going. Oh my God, the bank said no. Exactly.
Yeah.
The banks are going to say no. I keep telling you, there's a housing market and a lending market. Why did I spend almost a year refining all of my stuff, including my apartments? Because the lending window is wide open. I have apartments with interest rates fixed for 30 years at 3.99. Y'all missed it. I told you, I screamed from the hills. When the lending window is open, go get it. The lending window is now shut. Only the best of the best, the 800 credit scores, the 50% down, and they will get stupid low rates. Sorry, folks. It's just where we are.
So, in terms of a hard landing or a soft landing, these are terms we've heard thrown around by the media and by the Fed. Lawrence Hornbeck asks, he says, if the events that have happened over the last couple of weeks is the beginning of the next recession, is this a soft landing or something else?
So let's put some numbers on it just so that people kind of see it. So a soft landing, in my opinion, is GDP that never goes below negative 1%. And a lot of people would call a soft landing below trend, but positive. So a lot of people would say 1% or less. And in fact, the Fed in their latest dot plot came out and said GDP for the year will be up 0.4%. So context, we'll call that a soft landing. Anything greater than negative 1% GDP, negative 2, 3, 4, that's a hard landing. Yeah, I think, and again, I'm once again going out on a limb. I think the Saturday after SVB went out scared mom and dad. They've continued to scare mom and dad. Even the big banks are losing deposits now. It's crazy. And I think consumers are going to retreat, and it will be a hard landing. And I'm on record, again, going out early, 9 or 12 months from now, the recession will be called Q2. We have just started. April 1st was yesterday. I believe the recession will be technically Q2 of 2023. And I know I'm making that ridiculously early, but that's what I do on my channel is I kind of tell you what I see. I try to look around the corner and make early calls. So it's coming. And I think soft landing left the building.
Okay, so with inflation and low interest rates, Jeff M asks a question. He says, if rates go sub 6%, won't that make the low end of housing heat up even more? And if so, how does inflation come down? Won't it just kick right back up again?
Well, inflation has a lot. So a couple of things. When you look at the calculations of CPI and all of that, it is far more about rent than purchase price. CPI is not an asset-based calculation. It's an expense-based calculation. So even if the low end goes up, the assets go up 50%. There's not really any carryover to CPI. If rent goes up 50%, that rolls over. So I think Jeff is, and I think most people do this. I'm not picking on Jeff. It's just who asked the question. I think he's looking at assets and he's frustrated when it's really an expense calculation. So again, I think rates are going sub 6. I think the affordable or first time homes are not coming because the move up buyer is not there. And, supply and demand will win out. Prices are going to go up. But I don't think rents go up. I think we've saw a decade of rents. I think rents are generally soft, certainly in apartments. And, in some markets, maybe even houses. But the short answer is asset prices aren't in CPI, expenses are. So they're very separate, even though most people want them to be connected.
Okay. We have one more question. This one was a little bit more heated. And this is how you talk about tracking the consumer. From Phenomenal 2779, he says, you talk of the consumer, but the consumer is in horrible shape. Record low savings, record credit card debt, record number of people behind on rent. And if not for loan modification, there would be far more foreclosures. How can this consumer keep up with the current housing market? Prices and especially rents are way out of whack compared to incomes. Too many investors chasing one asset that is now completely overinflated.
So I don't know who this guy is or lady is. They're generally in the camp of doom and gloom. Clearly, they're reading all these things. Again, you can read whatever you want. I don't think the consumer is nearly in the baddest shape as this. Are there consumers in that shape? Absolutely. There always are. But I would tell you you flip the coin over, you could see a lot of consumers are in great shape. And I'm trying to uncover that for folks. I think one of the biggest misgivings out there is record low savings rate. And I've tried to highlight that for folks. The savings rate thing is a mirage. It's a calculations of saving account, checking accounts. And what have we seen transpire over the last couple of weeks? There's been record inflows to money market. We are seeing gold being bought hand over fist. We're seeing people take money out of banks and put it in coffee cans. We are seeing Bitcoin go up. We are seeing people get out of cash. So if you want to think if you want to think everything's doom and gloom, no need to follow me. I think generally speaking, I would be like, if you were on a scale, I think the consumer is not in great shape, but I don't think it's Armageddon either. And I actually think, to this point, one of the things that's going to become that asset's that 3% mortgage. Just think about that. If you took action and you bought or refied at 3% and all of this inflation, your housing cost isn't going up. Think about that.
Right.
If you're one of the, I think Goldman Sachs or somebody said 99% of mortgages are sub 6, 80 something is below 5 or 4. It's just crazy. So there's a lot of people, 64% of America are homeowners. Their housing expense is fixed. So I don't prescribe to that everything is burning nonsense.
Yeah, this channel is not a doom and gloom channel. The purpose of the channel is to help you learn how to define your buy box and buy one rental at a time and reach financial freedom. So now, for those of you who don't know, I'm actually coming to you this morning from Gary, Indiana, and I have a very special guest with me who's going to come in and join us for the next video. So, Mike, that's all I had for questions. We'll see you in the next one.
Folks, if you want to put in a spicy comment or whatnot, you can leave it below. You can also reach directly Millennial Mike on his Instagram. And again, I don't know these ahead of time. I react as they come. So always look forward to this session. Thanks, buddy.